This topic is relevant for multiple reasons. So India recently displaced even UK as the fastest growing fifth world economy, and in today I came across an article where S&P Global Rating says that India is going to be the fastest economy for the next 3 years in Asia Pacific region. So the opportunity and the potential is huge and immense, and we are at an inflection point where the entire world is facing headwinds of recession, and we are perfectly poised to leverage technology and unlock opportunity. So with this, let me start by putting the first question to Arushi. She's joining us virtually. Arushi, how do you see the virtual digital asset landscape evolving, and how can regulators enable responsible innovation? What's happening around the globe, and how Indian regulators can enable responsible innovation? Your views on that?
Yeah, I hope everyone can hear me.
Yeah, we can.
Okay, perfect. Well, thank you, Sharat, for the question, and good afternoon, everyone. Would have loved to be there. Unfortunately, I could not make it. So recently, we published a paper on this very topic that was a global approach to crypto asset regulation. And as a part of that, we analyzed close to 20 jurisdictions to understand this regulatory evolution. And we found some common trends, right? The first is that most of the regulators in the space are either central bankers or financial sector regulators, which also means that most of the frameworks that are emerging are incorporating learnings from our existing financial service frameworks. And it's also possible due to the fact that most of these crypto asset use cases actually just pertain to the financial sector. We've seen very limited work being done on non-financial use cases, such as enabling brand management with NFTs or driving sustainability initiatives. Within the spectrum of AML, within the spectrum of bans and legal tender, we've seen a large focus on building out a licensing regime with a strong focus on ensuring AML CFT controls and consumer protection. We're also seeing debanking emerge as a big concern, and more regulators and governments are paying attention to it. Because if you're unable to provide banking services to an entity, you're virtually pushing them outside your jurisdiction, which can hugely limit the regulator's ability to supervise effectively. And finally, we also see a lot of efforts from the industry side by, for example, a lot of entities tend to voluntarily ring-fence transactions to comply with capital control laws. To your second part of the question, Sharat, in terms of what can be done to drive responsible innovation, and obviously Web3 is a much broader concept, something we all look at as the next iteration of internet, open, decentralized. But what we found that on the regulatory side, it helps to have more clarity and certainty. Agility is extremely important, which to some extent is possible through regulatory sandboxes. We are also seeing more and more efforts that need to be done in leveraging tech itself. Blockchain analytics, for example, is an excellent tool, extremely useful in even reimagining for better regulatory tools, right? On the industry side, I think they're extremely well placed, similar to the internet or telecom era, to evolve best practices and possibly technical standards to ensure interoperability within the ecosystem. Thank you so much.
Thanks, Arushi. And I will pick two words from your response. One was debanking, and second was the sandbox, right? So I think debanking is one of the biggest roadblocks where it's kind of hampering innovation and stifling, if I can use that word, right? So let me put this to Prasanna, you being an ex-banker. So put on your maybe banking hat and tell us more about what is the role of banks and incumbent players in financial services in driving adoption of blockchain technology? Since you have been interacting with both regulators and different ecosystems, what are the use cases of implementation which are the potential of disruption? Your views, please.
Yeah, so I think wonderful, Sharat. I think banks, if you look at overall blockchain adoption, since blockchain is becoming another prominent technology after internet, and since 2009 we have seen how cryptocurrency has been rise with Bitcoin, with Ethereum. I think almost 50% plus projects on blockchain are on the financial side, followed by insurance or media entertainment, and furthermore gaming and all. And banks, and if you look at the rise of banking from brick and mortar to internet and mobile, internet mobile typically backed by internet as a technology, internet banking or mobile banking. And the most of the business model today, which is aligned with the fintechs, which is aligned with external entities where we do opening of current account, savings account or lending, everything is now going digital. Why? Because internet is that foundation technology which comes and ease out the customer experience for offering multiple products to the various types of customers. This is what is happening in India, outside of India also. Now, while doing this, there are still gaps, so-called trust gap, right? How do we, and these gaps are called as operations, right? So how do we really create an account? So there is an operations or man in middle between who will act called as a maker checker, or reporting of a frauds. There again, there are manual actions. Likewise, if you sit inside a bank, you will find at least there are 300 plus operations or gaps who needs to be nullified as an automation. So as an automation, every bank will keep doing their automation, but at a larger scale, if you have to bring on complete banking with a better experience at a scale, then we need to look at what is the next level of internet. Then obviously the blockchain technology comes and says that I can create that network impact, where opening a bank account typically might take 5,000 to 10,000 rupees, or it takes at most 20,000 rupees to open a loan book for any bank. And again, that customer, if you have to go to another bank, you have to redo that same exercise with some operations. That is an additional burden. Imagine some of you must be having minimum 3 accounts, and you must be banking with only 1 or 2 banks. What does it mean? That third or fourth bank has unnecessarily invested that much to provide that banking experience, which what we can do, we can create a KYC experience, do the KYC once, and that KYC is available to other banks whenever customer give that consent. And that is technically possible on blockchain, but how do we bring on a better guideline or a better functional thing? That I'm talking about one use case. Now imagine there are other use cases where reconciliation, settlement, where merchant is paid out on the next day on UPI. You guys are happy with the UPI, but UPI is again a victim of that internet, and a lot of frauds are happening. So blockchain comes and says that whatever has happened so far, it's okay, but we can give that judgment that we can do better automations to the overall banking ecosystem. Another example could be reporting of a fraud. So fraud, suppose reported today, Vigilance Department has to re-report to the RBI, and that data has to be aggregated in a central fraud registry. So typical cycle for this whole thing is around 45 days. Imagine some of you, or not some of you, some fraudulent customer comes and he is aware of this gap. And we have seen those gaps with some examples like Niro or Malyas, right? And they have identified those gaps and they have done a lot of frauds in a banking ecosystem. So likewise, what regulator is looking at today with some companies like EBIC is one company which has come up is recently with 18 banks coming together. Or we have seen how RBI Innovation, which is arm of RBI, has done some POC pilots on trade finance, LCBG. So I think individually banks has understood power of blockchain, like Yes Bank has done with Bajaj Electrical, ICS with Emirates NBD, and like Blockstack, we are working closely with some banks to do some automation. But as a network effect, which the example which I was giving you, and imagine over a period of 5-6 years, not only these models, which is traditional account opening or so on, tomorrow digital asset, tokenization, the way JP Morgan is working closely with OINX, same kind of model Indian banks will adopt. Recently, JPM announced that they are working closely with the 4 Indian banks. CBDC is another example of a blockchain-based application. So I think so in a nutshell, within a bank, there are many areas, and if you sit and ask that every process, is it a manual process? Is it a multi-party process? Do we require some reconciliation settlement? Do you need some reporting? Wherever these things comes, automatically what happens, RBI every year over a period of last 20 plus years, they come up with a lot of guidelines. Imagine KYC has gone through multiple revamps. Your paper KYC has become an actual norm in 2004. And since then, they come up with eKYC, followed by video KYC, followed by they are talking about CKYC. And still these KYCs backed by a lot of operations. Let us bring on another KYC which will nullify all those controls which we have created last several years, right? So blockchain comes and gives some kind of advanced to the regulator, which typically talks with the other banks and recreate another experience, right? So it's a foundational technology. It will take its own time. It's not like you got a smartphone and you started operating and your life has changed. So, and more actors are involved, right? So where more actors or more companies are involved, you need to look at regulation aspect, data governance aspect, how do we share this data, KYC data from one bank to another, right? So I think there are a lot of such things, like even you talk about CBDC, where there is a cost of a printing currency. Right? After printing, there is a cost of distributing of this currency to the various branches called as a chase branches. And after that, money moves from those branches to in the van with a third-party service provider called as a cash management system. So what happens at the end of the day? It's all manual reporting back to the bank that this much cash is loaded. And at the end of a financial year, some banks are in the room of almost 1,000 crore plus amount will be parked in a suspense account during their financial report. CBDC comes into the picture, it will revamp that whole thing. So while we talk about these couple of use cases, if you sit in a bank, you will come up with a lot of such path-breaking use cases. And recently DLT committee, blockchain committee at RBI started doing this kind of a study. So eventually, the way we have seen guidelines on mobile banking or internet banking or digital assets, similarly, you will see some guidelines where blockchain should be integral part of every system eventually. So that's in a nutshell, and how banking is supporting for many other areas. Yeah.
Thanks, Prasanna. Now let me come to Vivek. So there was a recent report by Bank for International Settlements where they talked about the future of the monetary system, the concept of a uniform ledger, and the concept of tokenized money. But there's also a notion, there's also a narrative about the future of finance is going to be decentralized. So what are your views on the global opportunity, what it means for India, what are the challenges, roadblocks, how do we overcome that and unlock opportunity for India in general?
Sure. First of all, thank you for organizing and having me here. See, I think we all believe very firmly that India could be a powerhouse as far as Web3 is concerned. Given our technical prowess, given the digital penetration in the country, our demography, there is an opportunity for us to be, what could be an engine for, what could be the future of the new internet, right? So that's, I think, there is no doubt that we all believe that we could be that powerhouse. In terms of, some of the prominent use cases that I see coming up in more recent times and which would be, I think, equally relevant to India, could be one could be around tokenization of real world assets. I think when you think about on-chain tokenization of real world assets or in any form tokenization of real world assets, I think blockchain is a natural use case for it. And as per a new study that has been done by, I think, Boston Consulting Group, about 16 trillion worth of assets will probably be shifted to blockchain by 2030. Citigroup has called it the killer use case for blockchain. And if you just think about it, right? I mean, if you want to store, the data in a tokenized fashion, and you want to basically be able to track that in a transparent fashion, where else would you do it if not on blockchain? We have been calling digital assets on blockchain tokens forever, right? So if you're not going to do tokenization on blockchain, we are going to do it. And there are several advantages with that, right? The first one of which being that you can actually do fractionalization of assets, right? Imagine you've got your real estate, and real estate can be sold in very small blocks. Then the efficiency gains, you can do it pretty fast, right? You can actually move the transactions, really, really fast. And all of that becomes very, very relevant for India, right? I mean, basically we have upwardly mobile audience, we've basically got young audience. And in this world, India is actually seeing a very, clear, distinct shift towards financialization of assets. Take a few decades back, and you will see that a few decades back, we used to invest a lot into illiquid assets, right? We would buy lands, we would buy properties. But now, the current generation, at this moment, India is very much focused on investing in liquid assets. We are restless, we want things to move really fast, we want liquidity to be available to us, we want our assets to grow, and that is where any of your illiquid assets now can suddenly become a very liquid asset because you have tokenized that on chain, right? And then obviously the opportunity that comes from being able to tap assets globally. You can actually get access to any of the assets anywhere in the world, internationally, simply by basically tokenizing and putting on blockchain. Obviously, when you talk about international, you have to talk about legal aspects, you have to talk about compliance. And that is where I think the second use case, and I think Prasanna briefly touched about it, the second use case comes in, which is decentralized ID. I think decentralized ID will be a killer use case. As per me, I think that is a killer use case for blockchain because it in itself actually unlocks several other use cases. For example, how do you tokenize an asset and store that asset on chain if you are not able to basically associate it with a proof of human? And proof of human is what actually you get from decentralized ID. You get proof of human which is reusable, as Prasanna was trying to say, and then you are able to apply any sort of legislation on top of that ID, be it global legislation, be it your local legislation, and then you're able to do that. And I think that is what I see as two primary use cases that will be, I think, driven through blockchain in the coming times. Obviously, blockchain is expected to touch almost everything globally, but I think these two use cases will be very, very prominent. Besides that, having said all of that, right, I mean, there are definite, challenges to the adoption of blockchain, primarily around the headwinds that we are seeing in the, due to the compliance and, the legislative aspects of it. I truly firmly believe that the real push for the blockchain adoption will actually come when we start getting clarity around regulations. Meaningful, clarified regulation is key, is central for us to be able to, bring the adoption of blockchain everywhere. And personally, I am pretty hopeful that we will positively see a positive regulation. India is probably poised to take lead in that. The question, and I think, like I was trying to say, I think this train will arrive, this train will take off. The question that we need to answer is, do we want to be a compartment in this train, or do we want to be the engine of this train? Right? And this is the opportunity differentiator. Getting some clarity around regulations, we have the innovation, we have the technical prowess, we get this, and then we are basically have the opportunity to be that powerhouse that will actually drive Web3 forward.
Thanks, Vivek. In fact, I would echo your sentiment when you say that we don't have to be the second compartment and have to be the engine, because the time to play second fiddle is over, the time to lead for India is now. So let me move on to Vivek from Flipkart. And Blockchain Center of Excellences, they have become breeding ground for innovation, product innovation, and adoption. And since both Vivek and Aishwary, you are part of Blockchain Center of Excellence. So I will begin with Vivek first and get his views on what you have been doing at Flipkart as far as digital commerce and Web3 is concerned, and what is the opportunity for India in general, what are the roadblocks, what are your views on that?
Yeah, I too echo Vivek's thoughts, by the way. I definitely think that regulatory clarity is a must. Anyone who is a builder, operator in this space has run into enough and more challenges. And it gets frustrating, but at the same time, you know that, okay, if it comes through, and because the opportunity size is big, right? So I think, yeah, like fully echo the optimism that the regulations need to come through and there needs to be enough clarity. I think, so at Flipkart, the way we look at it is, at least from a consumer standpoint, right? And there is enough stuff to be done in, like, say, the banking sector or even the B2B, but like the consumer opportunity is actually massive, and it goes beyond crypto, right? Like, so I think on, like, the first, like, killer use case was to actually get like CoinDCX and the likes of like these exchanges to onboard users. And they were able to do this because to the user, like, I don't think users really had to buy into the idea or like philosophy of decentralization, right? Users cared about like owning something which could make them a healthy return or like an even greater return than like other forms of asset. And the experience was akin to buying stocks or mutual funds, right? Which is why you ended up onboarding so many users. So how do you like then think of like other use cases which could like bring like a lot more masses to adopt to stuff, but like you need to build stuff that is useful as well, right? So there are three like broad areas that we look at. Like one is access. So can we, there's a lot of data on transactions, right? So like most e-commerce transactions actually happen in cash, right? Which is like transactions that are available to like e-commerce platforms, but not available to anyone else. And I think if you think about it, like access to credit is going to be unlocked in a meaningful way with the whole account aggregator framework, right? So but that's still not going to capture like a lot of the cash transactions that are happening. So the moment you are able to capture that in a trustless manner and make it available, you unlock credit to a lot more people. So you give access for a lot more people to be able to transact and buy things and like enter the economy in a much bigger way and for the economy to grow. So I think like unlocking access has like a very, very big opportunity. Then the second thing is engagement. And engagement is what we are currently building towards and what we are most excited by. Most membership or loyalty programs, the data of like, a customer being loyal or having a certain number of points or a certain membership is again sitting in a very centralized structure, right? So what happens is that you may be sitting on like a ton of like, airline miles or like, even we run our own loyalty points called super coins. But it becomes very hard for you to use it outside of that centralized ecosystem. If this thing is put on chain, it becomes very easy for everyone to know what the treasury looks like, what are issuance, earn, burn mechanisms, and for other people to be able to issue and accept it, right? So I think like just the amount of usage that you can unlock through putting it on chain because it becomes interoperable is very exciting. So that's what we are sort of like foraying into, and we've recently announced the launch of our waitlist for Firedrops 2.0 as well. What we're excited by is like what Starbucks did, right, with the Starbucks Odyssey Web3 loyalty program. We think that we have that opportunity because like we work with thousands of brands. All of these brands cannot like, create their own Web3 loyalty journey, right? So like, can they launch engagement journeys where rewards are something that the users earn, right? Like by engaging with the brand. And if those rewards, including say a discount, right? Like you win 1,000 rupee off of a Poco phone, but you just ended up buying another like phone like a year back. You're not looking to upgrade. Can you sell that discount itself, right? And we think we're excited about this because NFTs in India, like at the intersection of community or art may not work, but India really, really cares about value, right? Like if you can tokenize discounts and stuff that people are anyway like using, could that unlock some sort of use case along with, of course, like points and other things. And lastly, I think it's about more verifiability. I think we were just having this discussion over a coffee break earlier that we end up seeing like a lot of counterfeit products, right? So if there is an opportunity, we don't know how to exactly solve this. I'm very open to brainstorming with everyone here. Like if there's an opportunity to solving for verifiability of products, trusting reviews and ratings a lot more, trusting sellers a lot more, and that can extend beyond to like the entire sort of country, right? Because if you think about it, ONDC is a protocol, but it's a protocol not on chain. A very similar protocol could actually unlock a lot more because then everyone can read like, data about like products, merchants, sellers, ratings and reviews across the board.
Yeah, thanks Vivek. In fact, you rightly pointed out the potential of putting data on chain unlocks opportunity for all the players in the e-commerce ecosystem. Let me come to Aishwary and get his views on what Polygon has been doing, because Polygon is at the forefront of enabling Web3 adoption across the globe, right? So a decentralized identity is one of the key players of, again, enabling the proof of human, as Vivek rightly said, right? So give us some sense of what is the roadmap for Polygon and what are the plans of increasing adoption of Web2 audiences or Web2 businesses into Web3?
I think earlier Vivek also said about identification on chain and everything. So like with Polygon, we are building multiple products as blockchains infrastructures, and Polygon ID is one of that product. And like how I see identity, so today when you go and do a UPI transaction, so when you start a UPI transaction, actually your bank, you send a message which connects your bank account to your UPI ID, the KYC is verified and everything is done, right? That's how your UPI ID is created. And after creating that UPI ID, what happens is anytime and every time you're doing a transaction, your KYC is not moving with you. What is happening is there's a token generated which essentially goes out and binds every transaction with that UPI ID to prove later on that it was you who did that transaction. So that is what we are trying to do with Web3. I mean, a lot of people want to go into Web3, and the first question always that they come up with, how do you know like who is doing what, right? And a lot of people in Web3 say that they want to be anonymous, right? So we try to solve for that. How did we do that? We created a way in which any one of you, like probably there would be a lot of KYC providers here. And what Polygon ID does is it actually goes out and connects with your identification system, the Web2 KYC platforms. Once it is done, the next step it does is it goes out, takes the data from that KYC provider, whatever data you have already given to the KYC provider, to generate a decentralized identity. And after generating this identity, we delete all that data which we have taken, which means now we do not hold any data. So if we don't hold any data, there's no breach, first thing. Second thing is, now when we have created this ID, and this ID is attached to your Web3 address, anything and everything you're doing is getting binded, which is exactly what UPI does today, right? And once that is binded, now tomorrow, let's say someone comes in and says, okay, so this address seems to be doing something which is breaching FEMA and everything like that. Now what essentially you have to do is, as an issuer, you just have to go back to the KYC provider, tell him, okay, this is something where we need more details on. The KYC provider will provide you the data of who is this person, and then the law enforcement can do whatever they want to do, right? So that way it unlocks a lot number of potentials. And working with a lot of fintechs across the globe, and this is something which I've been implementing with a lot of them. So within your fintech app, I think there's a company called GetCogni. So I was working with them for like 2 months to implement this. And how they did it is, they are a fintech, they are FDIC approved in US and everything. In order for them to go out and issue a Web3 address within itself, we incorporated Polygon ID there. Now, each and everything that is being done there is being done through that identification system. So now, let's say there are 200,000 people in that fintech using things, going into Web3 and doing XYZ things. Everyone can be tracked, traced, and that is very powerful. But while they're doing it on chain, because nobody actually got out and recorded their name in a public domain, there's no way for you in the Web3 community to actually prove who is this person, right? So that way people can still remain anonymous, but at the same time, they can do a lot more transactions. So that way we are trying to go out and bring compliance into it, ensure that that is maintained, and go towards it with that adoption. So I think one of the good things that happened after this, and they actually, once they made this whole thing out, they went for a approval and a patent in US, and while 90% of them are getting rejected because there's a crypto element and everything like that, they got it in 1 week. So that is like where I think identity is playing a major role. And I think in India also, a lot of things where a lot of companies, a lot of startups are doing that. So that is where this identity will play a key role in bringing a lot of people on board, and telling the regulators that, okay, it's not that if someone has created an ID or a Web3 address, it's only for illicit activities.
So I think what Vivek spoke about and what everybody is speaking about, regulation is required. So primarily, what is regulation? Regulation is all around your customer experience and how are you taking care of a customer data and how are you taking care of customer grievances and all. While we talk about blockchain, blockchain goes beyond that, right? There are a lot of use cases in every area, financial, healthcare, where we will have to really retransform the current operational model onto the automated blockchain model. What regulation is required is all about new business cases, which we have not seen earlier in the internet era, which are going to be prominent use cases. Tokenization, as you said. So why I want to touch upon this angle? Well, because today, earlier we used to have a one silo service coming from one hospital or one bank. Now that has moved totally on marketplaces like Paisa Bazaar, Bank Bazaar, and so on. And what study says, and even our friend can agree, the study was given by World Economic Forum itself. More than 400 entities will come on marketplaces where same individual will want those services everywhere. That is where digital identity comes into picture, where this guy can really avail those services everywhere. And what you earn as a token, right, or what you as a value in one marketplace has to be reutilized somewhere else. These are the futuristic model. What we have seen yesterday as a wave economics, starting from 2000 till now, world is going to change. Will be around your devices, world be around everywhere. You want to keep your presence for the limited time as far as your consent is required. So that is a more power of a blockchain, creating that trust with the right tokenization model and identity model. And these regulators are not ready for that. While regulators are ready for transformation model of a KYC or some of them, that is the study or that is the thing they are cautiously doing. Some regulators worldwide have done it very well, like Switzerland, some are, and in India, they are tried doing it, right? For example, recently SEBI announced some guideline. But eventually, a lot of efforts are going. Look at IFSCA, which is a regulator giving a lot of warm welcome to all those tokenization companies outside of India and in India also. And similarly, regulator like RBI is also looking at how it can be really be useful. So once again, regulation is more required for that angle. And while that push like G20 where we have taken a lead as an engine, certainly let us look at how we will prevail that, that ownership or authorization for this year. And certainly we should see as a Web3, how we can become a powerhouse, or certainly we can become powerhouse, where Polygons and many other companies should support. Yeah.
Thanks, Prasanna. So we're running out of time, so I'll put the last question to Arushi and get her views as a closing remark. So what do you think from your vantage point, what is the role of India in enabling this regulatory framework, and what is the possibility of a comprehensive global framework coming by September when G20 presidency ends? Your views on that?
Thank you, Sharat. Very interesting question. I think India generally is a major player for any sector, not just this sector. So it has a huge role, it has a huge stake to actually bring about a comprehensive, clear, certain regulatory framework. We already have massive talent, right? That accounts for something. In terms of how things are going for G20, I think they're going pretty well. There's already a mandate to work on it along with some of these international organizations like FSB and IMF and World Bank. They're already pretty much working on the process of it. We've already had some of those principles having been laid out by FSB in previous publications. So the hope is we will have at least a text to start with, but how that consensus gets built is another whole story. But there's a lot of effort behind it, I would say. So fingers crossed on where we see this evolving. But then just the global framework itself is usually not enough, right? We need to see how it gets implemented in each jurisdiction. So
thanks, Arushi. And I think multilateralism and cooperation is the key here. So with this, we are coming in to an end of today's session. Let me thank Vivek, Gupta and Prasanna, Vivek, Madani and Aishwary for sharing their views, and all the audience for listening to us. Thank you.